Welcome to Property Talks with your favorite agent, Kanya, the property guy. And today I have a very special guest, okay? The one and only Bjorn Prinsloo. Bjorn, how you doing?
Awesome, Kanya.
Also known as my biggest hater.
Yes, I'm the biggest hater.
Today we are friends. Today we are friends. How you doing?
I'm good, man, and you?
All good, all good.
Awesome. Thanks for this opportunity.
Yeah, no, thank you.
I do appreciate it.
No, thank you for taking time to do this. Before I jump into the questions, and I have a page with me because I have quite a lot of questions here.
I'm doing this for free, by the way. It's unpaid. My time, it's free.
Because you see, he's such a well of information, so I have to have pages. I actually need a file to ask him questions. But tell me, how long are you in the home loans? Oh, Bjorn is a bond originator, by the way. Yeah, so that's the first person that you see when you want to buy a house. It's not the agent. You first start with the bond originator, and then you come to us. How long are you in the home loans game?
Wow, I've basically started in this specific industry in 2009. So from 2009 up until now, I've been in the industry. So I started at the Green Bank.
Okay.
Am I allowed to give banks names?
Let's just be safe.
Okay, I started at the Green Bank in 2009. Worked with them for quite a while, a few years. Then I decided to step out of, still within the home loan space, but to step out and try the bond origination side. So I moved over to the Blue Company, and I was there for about a year. And then I think I returned back to Nedbank in 2017.
Oh, okay.
And then where I started here at GetGo Homeloans was in 2019.
Oh, okay.
So yeah, so I've been in the industry for quite a while.
Quite a while, almost 20 years.
Going on for 20 years. I'm giving away my age.
Are you?
But yes, it's
You
been
don't
a while.
You don't look like. What's going on? What are you using?
That's the secret. It's the barber. You know, if the fade is in.
Fade. I don't relate. I don't relate. All right, let's jump into these questions. Okay, so explain to us what a bond originator does, and then who pays a bond originator.
Okay, so basically, a bond originator is the middleman between the buyer, the estate agent, and the bank. So what happens is, Kanya will send me a client. I will then, number one, I'll start off by doing a pre-approval.
Yes.
So pre-approval is a good indication of the client's affordability, the client's credit score, how much they can potentially purchase, right? So that's the first point. Then from there, what would happen is I will then go back to the estate agent. Estate agent will find a property for the client. And once I receive an OTP from the estate agent, I will then submit it to all the banks on behalf of the client. So instead of the client individually going to each bank, we are one stop and we send it to all the banks on behalf of the client.
Awesome.
So what happens then is once the client has received feedback from me from all the banks, we will then make it, or the client will make the decision in terms of which bank they want to go to, and then I will then submit it to our back office and they will liaise with the attorneys. So in a nutshell, that is, we're the middleman. And in terms of payments, we receive our payments from the bank directly. So it will always be a free service basically. So I know just some extra advice, don't go with someone that is going to charge you to do this service, because it's a free service. It's happening out there. So don't. If someone says, I'm a bond originator, you must pay me to do it, step away immediately. So yeah.
Okay, you heard it. Free service. Okay. Explain to us, because a lot of people, they can't grasp like the interest rate and how it works. So can you just explain how the interest rate works?
I'm not an economist, but in a nutshell,
Yeah.
So you get the repo rate, which is currently at 7.5%, and then you get the prime interest rate, which is currently at 11%. So the difference between the two, that is what the bank lends it to the service. I mean, that is what the reserve banks lends it at to the service provider, which is the different banks and so forth.
Okay.
So how your interest rate is determined when you are applying for a bond. There's many factors, but in a nutshell, basically it is obviously if you're putting down a deposit, if your credit score is good and so forth. So that would, and actually the area in which you purchase also plays a role. So that would determine what interest rate the bank would then offer you. So when we do a pre-approval, like I mentioned previously, we will do the pre-approval at prime.
Okay.
So let's say today the interest rate is at 11%. When we do a pre-approval, we'll do it at 11%. But on our pre-approval certificate, there's different scenarios, like either above or below prime. So if prime goes up, our interest rate certificate will change. Let's say it goes up to 12%. We will do our pre-approval certificate based on the current prime rate. So it's a good indication of what it is and which price range you can purchase in. So that's kind of how the interest rate works
in a nutshell.
Yeah.
Okay. You explain pretty good for someone who's not an economist. Okay. Okay. So how does one get their interest rate fixed? Because I know there's a is it called a variable interest rate and a fixed interest rate?
Correct. So you get two sets of interest rates, variable interest rates and fixed interest rate. It will always be variable up until the day that it registers. So as an example, today the prime interest rate is 11%. Let's say the bank approves a bond, client accepts it, and for argument's sake, it's only 11%.
Okay.
3 months, 2 to 3 months down the line, it's going to register. But let's say the interest rate decreases between now and when it registers, because it's variable and it decreases by 0.5 basis points, and that means your interest rate will also decrease by 0.5 basis points automatically because it's on variable, so it will drop to 10.5. However, once it registers, okay, before I get to the registration part, the same would apply if the interest rate goes up. So if it hasn't registered yet and the interest rate goes up, whatever the bank offered you, it would go up by the same amount of basis points, right? But once it registers, then you can decide: are you going to keep it at variable, or are you going to phone the bank and ask them what are they going to fix it at, or what can they offer? However, with a fixed interest rate, you should just remember that. Let's say your interest rate offered by the bank is 11%. The banks will never fix it on what it is that they offered you. They will always add on top of that and then fix it for a specific period. What that amount is, they will determine. I can't say upfront. I don't know. The banks determine that. And it's for a defined period, 2 years, 3 years, whatever the case may be. So that's the conversation the banks will have with you. Once you know that information, then you can make an informed decision. Am I going to fix it, or I'm going to leave it on variable? So that is basically. But in a nutshell, you can only go from variable to fixed once the bond is registered on your name.
Okay. And for people that are fixing it, is the term that the banks fix it, is it 5 years or something? Because
it depends. It depends. You can choose 2 years, 3 years. The banks will discuss the different terms with you.
Okay.
So I haven't had one in a while, but the amount that they increase it by is determined by the 2 years. If you choose a 2 years, 3 years, 4 years, or 5 years. So, but that's a conversation the banks will have with you. So the banks will be able to obviously give you because they have their own system of working out what they're going to offer. No one can say up front. But that's basically 2 years, 3 years, 4 years, 5 years.
Okay.
Yeah.
Okay. No, I got you. What is more important to the bank when giving out a home loan? Now I understand, you might not be able to give a full, perspective on this, but like, since you're someone that has a close relationship with the bank, what is most important to the bank when giving out a home loan? What do they look at? Do they look at is our affordability important, or is our credit score more important?
Both are equally important because you can't 99% of the time you can't get a bond if you can't afford it, obviously, and your credit score is not on point. So they both work hand in hand. So when you submit an application, the banks will look at the income, the expenses, and so forth to determine your affordability, how much you could qualify for. But at the same time, they will also look at your credit score to determine if we're going to give them a 100% bond, if we're going to give them a 90% bond, 80%, or if we're going to decline the bond. So your credit score, that will determine what the bank should offer you, 100%, 90%, 80%. It will also determine what interest rate the bank is going to offer you. So they both play an important role. So they work hand in hand, basically.
Okay, so they are identical twins.
Yeah.
All right. Okay. And speaking on credit score, how can someone grow their credit score quickly?
You can't grow it quickly.
What?
You can't.
In this world of Uber Eats and all these things where we get fast things.
No, you can't grow quickly. There's different phases to it. So let's say the credit score. Okay, scenario one. Let's say your credit score is poor because of arrears. So the first thing you need to do is pay up your arrears. So lots of people think, okay, I've paid up my arrears. The end of February, the 10th of March, I can apply for a bond because my arrears is paid up. However, that's not how it generally works. So the first step is paying up your arrears. The second step is rebuilding your credit score. Right? So that's what people don't understand. You need to rebuild your credit score. So that's why I'm saying there is no really quick fix to it, because what happens is if you settle it today, settle your arrears, pay up everything today, then it's going to take about 3 to 6 months for your score to start improving. So there is no quick way, because your credit score is a history of how you make payments on the account. So if you settle something today, the history will still reflect you are a poor payer because it's recent. But 3 to 6 months down the line, if you pay on time, if you pay the minimum amount due, now you're building up a history again.
Okay.
Yeah.
I'm asking in terms of somebody now who doesn't even have like a credit score. So like they're trying to build, so they don't have bad,
yeah, that's a second scenario. That's a second scenario I was going to say. So what I would normally tell the clients is go to the bank, your current bank, open up a credit card. If they're offering you a credit limit of 10,000, say no, I don't want 10,000, leave it on 2,000. Because remember, if you have that 10,000 rand available, you're tempted to use it, right? So exactly. So from an affordability point of view, that's why I always say keep it low. Because if you're gonna blow 10,000, your credit score might look good, but now your affordability is affected because your installment is high on that 10,000. So I always say put your limit down to 2,000, 2,500. Use it. You'll receive a monthly statement, but pay the minimum amount due on the due date for 3 to 6 months. Like I said previously, you're building a history. So that is your history. You can afford to pay the minimum amount. You're disciplined basically to pay the minimum amount on the due date that it's meant to be paid. So now you're building up a history with the bank basically and the credit bureaus.
But what can we do with 2,000 and me?
Huh?
Take the 10,000.
What do you? Don't listen to this guy. Please don't listen to him. 2,000.
You have to go to Refinance.
Long-term goal. You wanna live flashy on scope for the bank's money, or you wanna buy yourself a house? What do you wanna do? What do you wanna do?
All right, I got you. Okay. What is like a starting number for a bond? What is like the lowest amount that a person can get like a bond from the bank?
Look, I'd say 100K. I do stand under correction, but I think Standard Bank, the minimum they will give is 100K when it comes to home loan financing and so forth.
And the 100K, that's like 1.1.
For like for installment, it also depends on the interest rate. But let's round it off to about 1.1 plus minus 1.1. So yeah, I'd say 100K. I do stand under correction.
Okay.
But 100K is.
And like, is the highest amount that?
Look, the highest I can recall offhand, and I'm referring to my colleague now.
Yes.
She sold a property. The purchase price was 14 million, and the guy put down 50% deposit, or just above 50 or below 50%. And I think that bond was 8 million that was approved. So I think it can go quite high.
Okay.
Yeah, so she got in either 7 or 8 million approved for him.
Wow.
So yeah, I don't know what the cap is in terms of what the banks say. Okay, we're not gonna do financing above a certain, but that's the highest I can recall offhand.
I need to speak to your colleague.
Yes, now you need to speak to the buyer.
That's why
you need to interview the buyer.
I need to speak to your colleague so I can get that buyer who has 8 million, 7 million to put down as a deposit.
I'm telling you.
What we have problems?
I'm telling you, right?
All right. Okay. No, I got you. How many methods are there to buying a property, right? But I'm speaking as an individual or individuals, so as people, not as a business or a corporation. So like I know there's like a stock sale where I think FNB introduced that a few years ago. So how do you know how many methods there are for individuals to be buying a property?
Look, as far as I know, it's correct me if I'm wrong. So you can buy as an individual. Bjorn can buy on his own. I can buy with, if I was married, in community of property with my wife. If I married ANC out of community of property, I have an option if I want to buy with her or not. You can purchase with your parents, your in-laws, your brother, whoever's willing to purchase with you. You can actually purchase with him. But the important thing, like I'm actually busy with a scenario now. Let me just use that. So, husband wants to husband is purchasing. He's working. Wife isn't working. Her father is working, but the father is also married in community of property. So it's going to be 4 applicants just based on the marital type.
Okay.
Right? So it really depends who's willing to purchase with you. However, when it comes to, first of all, your score and your affordability must be in order. And whoever you're going to, so I can do a pre-approval now with you alone, and you qualify for 2 million. Now you actually want to buy a house for 4 million. Now you include your dad, but now your dad scores poor. Then it will affect the whole application because the banks look at it as one.
I see.
So it's important for their affordability and their credit score, whoever the additional people are, to be in order as well.
Okay, so then in a scenario where a husband is buying with his wife, but the husband is the breadwinner, does her credit score also need to be good in community of property?
Yes, because they're buying it as one.
Okay.
Because they're in community of property.
Okay.
So yes, it has
Alright.
to be good.
Okay, I got you. When is the process of buying a house, or when in the process of buying a house you have signed the OTP, you have received the home loan approval, what are you not supposed to do in between that time?
Okay.
Yeah.
Between I accept this bank, do
And
it registers.
registration.
Yeah, we tell this to our clients all the time. Don't go make debt. What I mean by that is, so when I submit an application, argument's sake, the 2nd of January, and it's going to register 3 months down the line, April, the 3rd of April. So that's 3 months. When we assess your application, when the bank assesses your application on that specific day, they approve it based on your current financial status, your affordability, your credit score, etc. So now, let's say 2 months down the line, you decide, you know what, it's approved, I'm going to go buy myself a car. Or it's approved, I'm going to take out a loan. Or it's approved, I'm going to take out any debt. The bank, it's written in all the bank's clauses, a day before registration, we can go and redo a credit check and compare what you have now to what you had 3 months ago. And if we pick up that you have additional debt, we can pause it right there and do a reassessment. And a day before registration, it can actually be cancelled or declined. So the biggest thing is don't take out any debt until it's registered on your name.
Yeah.
I had it once. It only happened to me once since 2009. And we always tell the clients, don't take out debt. And it happened to me once. I think about 4 days before registration, they went and checked and they declined it. Because the person just didn't want to wait the 5 days. So so don't take out debt. That's the most important.
Ooh, that's painful.
Yeah. Or don't skip payments of existing debt prior to registration. Because they also pick up that your score was good and now it's dropped. Why is it dropped? Did you miss payments? And they can review it on that as well. Yeah. So just make sure you continue paying and managing your finances the same as when you applied for the bond until it registers.
You know why I'm having such a reaction to that? Because a day before registration, I'm thinking my commission.
Yeah, the pay. Your bread and butter.
I'll spend the money!
You spent it in your already.
I'm in Hawaii and this client had to just do this.
Oh yeah, I'm telling you. So don't
Okay.
take out debt.
No, I
and
got
pay
you.
your stuff on time.
No, I got you. I got you. And what advice do you have on property insurance? Do you recommend that people take the one that the bank offers, or could they find better deals if they shop around themselves?
So when it comes to property insurance, I'm not accredited
Yeah.
at all.
Okay.
So I'm just going based on my interaction with the client. So at GetGo Homeloans, we do have an insurance department
Okay.
that deals with the clients, that will contact the clients once there's an AIP, which is approved in principle, or when there's a final in place. And then obviously the banks has their own insurance department, and then there's outside a whole lot of out there. So at the end of the day, when it comes to homeowners cover, that is compulsory for all banks. And with GetGo Homeloans, we are quite competitive in our pricing. Still the client's choice, obviously. So homeowners cover, which covers brick and mortar, geyser burst, etc.
Okay.
That is compulsory. So they
Okay.
must take it. But who they go with, it's up to them. They can decide.
Okay.
Then you get life cover as well. That's not compulsory, but it's advised. So should the one partner pass on, then the life cover should settle the bond. So it takes that stress off the remaining partner.
Okay.
You know, it's not compulsory life cover, but it is advisable.
Okay.
Yeah.
No, I got you. I got you. And oh, okay. No, you've already covered this question that I was about to ask. And so there's clips that have been going around, right, online, about ways to pay off your bond quickly or earlier. Okay. So I want to hear from you. How can one?
Just pay in extra,
Okay.
but you have access to those funds as well. So let's say, for example, your installment is whatever, 10,000 a month or 3,000, whatever the case may be. If you want to pay it off quicker, obviously you're going to pay in extra. So like I said, you have access to those funds again, but the extra that you pay in. So you're first going to pay off. I'm not sure, the interest first, and then the capital portion. Yes. So the installment that is on contract is, let's say, 20 years. So if you pay that every month for 20 years, 20 years later it will be done. But if you pay in extra, you can cut it by half. You can cut it from 20 years to 15 years, depending on how much extra you pay in. But if you access those funds again, then the balance will obviously go back to what it used to be prior to that. But you can pay in extra,
Okay.
yeah,
Okay.
to reduce the term.
Okay. No, I got you. I got you. Also, this one, I've heard that, and I'm also on the side that agrees with that side, that putting down a deposit helps, right? But there are people who are like, when you're doing a home loan, it's better that you don't put on a deposit, because people have their own agenda sometimes when they go to doing a home loan. From your advice, professional advice, is it better to put down a deposit on a property or
It
not?
depends. It's different strokes for
Scenarios
different folks.
again, yeah.
So if you need to put down a deposit, if you want a specific house, but in terms of affordability, you can't afford it, but you have funds to put down a deposit. So let's say you're buying for 2.5 million, but your affordability doesn't allow for 2.5 million, but you only qualify for 2 million, and you have a 500,000 deposit. How badly do you want a house? Then you put down a deposit, right? And to aid your affordability. But a deposit also helps reduce the interest rate. So let's say, for example, it's 2.5 million and you put down 500,000, your interest rate generally will be better or lower than someone that takes the full 100%. The reason for that is because you're putting the equity in the property is at 2.5 million. So now at 2.5 million, the bank carries all the risk. So if you're willing to put down, as an example, 500,000, the bank is not carrying all the risk. So they're willing to reduce the interest rate based on that. So a deposit does help when it comes to the interest rate as well.
That's such a perfect scenario, that because I always say the interest rate is the bank looks at your credit score and how much they can trust you. So that's how they judge it. Your credit score is telling them how much they can
Can
trust
trust
you.
you.
So when you put down now a deposit, you got more skin in the game yourself. So now they trust you even more.
Even more. They're not carrying all the risk. They're not carrying all the risk. So yeah,
Okay.
deposit does help.
Okay, no, I
Deposit
got
does
you.
help, but it's not required. It's not required.
yeah.
So, if you don't have a deposit, it's also okay. The banks will look at your affordability, credit score. Okay, this guy's good. He has a history with the bank. We'll give him 100%. You know, so there's different variances that the banks would look at. But yeah, it's not a requirement, but it does help with certain things.
Okay, no, I got you. New developments. Do banks favor new developments than existing homes, or
It depends. Well, not really depends. If it's so when it comes to developments, there's development packs that the developer needs to submit to all the banks.
okay?
And if the banks approve the development pack,
Wait, what is a development pack?
it's various things like, so let's say it's a new development. So the banks wants to know how much is going to cost for the finishes, how much is going to cost to lay the foundation, how much is going to, just a breakdown of what the development entails.
Got you.
Right, so that's it's quite a bit of stuff, but that's the plans, all of those things submitted to the bank, and if the bank approves the development pack, so then there's no real difference between a development and buying freestanding. Because freestanding, the banks will go out, send the valuator. If they're happy, they will approve the bond. If it's in a development, they have everything in black and white. If the client meets the criteria, they will approve the bond. The only difference, though, is some developments include transfer fees, so it's included like in the package and so forth. So then they don't need to pay that. But that's like basically the only difference. I can't say the bank prefers the one over the other. Development pack is in place. If the client qualifies, he qualifies. If the client goes to a freestanding home, qualifies, then he qualifies. You know what I mean? Based on whatever criteria the banks are using.
Okay, no, I got you.
Yeah.
Got you. That makes sense. All right. I think this is our last question. How does one go about getting a second bond without selling their first property, which they are still paying off?
When you say a second bond, you need to elaborate what you mean by second bond. So a second bond could be, now you have an existing property. This property is registered for R1 million, but now you think there's enough equity, it has grown to R2 million. I go to the bank and you apply for a second bond. So you're taking it from R1 million, you're applying for an additional R1 million. So now the bond amount is 2 million. That's a second bond.
So that's refinancing now.
That's like a further bond or second bond.
Okay.
Right? Or when you say second bond, they have an existing property, but they want to apply for financing for a second property.
Yes.
Is that what you mean?
Yes.
Okay,
Yes.
okay. What was the question again?
So like how does one go about that? So is it just as easy as the same?
It's the same process.
Or like then when can they start doing
Same process. Affordability, credit score. If that is fine, the banks would approve it. So you have an existing property, installment is 10,000 rand, for argument's sake. You're seeing another property, you go to Kanya, Kanya fills in the OTP, it comes to me, I submit it to the bank. After we've done the pre-approval, obviously everything is in order, we submit it to the bank. The banks will check the client's affordability. They will include the 10,000 rand as part of the expenses because it's an existing property.
Yes.
And once they got to the bottom line and the client can afford the new property, in the same process of client accepts it, goes to the attorneys, the attorneys go up to registration process. So if you can afford it, there's nothing stopping you from purchasing a second property.
Okay, I got you.
Yeah.
What advice would you give first-time property, first-time home buyers?
So as a first-time home buyer, it's important to know that there are attorney fees involved, right? So you get a transferring attorney, you get a bond attorney.
Yes.
Both of them ask their own set of fees, right? So you should just be prepared financially to know that you're going to pay fees. So that's a conversation the estate agent will have initially, and then I will just reiterate. Look, these attorney fees that's supposed to be paid as well. And then generally, if you're a first-time home buyer and you qualify with in terms of the bank's criteria, they also give up to 50% discount on the bond registration fees.
Yes.
So that really helps first-time buyers. So almost half of what they're saving half in terms of the attorney fees. And then also in terms of salary, if the combined is up to 22,000, they can apply for FLISP as well. So that's a subsidy, a government subsidy.
If you're a first-time
If
home
you're a
buyer.
first-time home buyer, yeah. And we offer that as a free service at GetGo Home Loans. So there's obviously criteria. Maybe you can do another video on FLISP if you don't have one with the different criteria. But and the FLISP can be used towards attorney fees. The FLISP can be used towards a deposit as an example. So I'd say if you fall within that criteria, then apply for FLISP.
Okay. No, I got you. All right, Bjorn, thank you so much for your time.
Thank you, man.
We truly do appreciate it.
Thank you.
Thank you for coming and giving us these nuggets of wisdom.
The nuggets is going all to the stomach.
Listen, I'm trying to lose weight.
Hey, man.
I'm trying to lose weight.
With all your WhatsApp statuses.
Of the food.
The whole cow. You guys eat the cow on weekend.
No, the devil is fighting me.
Weekend,
the devil is fighting me. Look here now. I told myself I'm not drinking coffee and all these things. I get here to the office, they're offering me coffee.
Hey.
Jacobs and I was like, no.
Discipline, you're disciplined.
I'm telling you. But yeah, Bjorn, thank you so much. I'm gonna put Bjorn's information down here. If you'd like him to help you with anything, if you have business, you're buying a property and you need of a bond originator, I'm gonna put all his information here and you know where to get him. Okay, Property Talks, Kanya, that property guy, your favorite real estate agent. Thank you for joining us. Subscribe.
Let's go, man.